Hello friends, today we will talk about important points under KYC guidelines that should be remembered. Please watch full video and subscribe the channel if you like the video. First of all, remember that KYC guidelines will be taken from 1. Prevention of Money Laundering Act, 2002 and 2. The Prevention of Money Laundering Maintenance of Records Rules, 2005. Now, we are learning about money laundering. First, we will know about the steps in which black money obtained by criminal activities is converted into white or legitimate money. First is placement. In this stage, large amount of cash generated through criminal activities is sought to be introduced into the legitimate financial channels in small quantities through transactions of small value, often through benami means. Second stage is layering. In this stage, the funds introduced into the financial channels are moved or rotated through a number of accounts in order to mask the origins of the funds. And the third stage is integration. In this stage, the layered funds are brought together in an account directly or indirectly controlled by the owners of the tainted funds. Very often at this stage, shell companies purportedly dealing in exports, imports, real estate, casinos etc. are used. Money mules are used to launder the proceeds of fraud schemes by criminals who gain illegal access to deposit accounts by recruiting third parties which act as money mules. To avoid these types of money laundering, banks should know about their customers. For individuals, banks generally obtain KYC documents of person opening or maintaining an account. While for non-individual entities, banks should know about their beneficial owners. Beneficial owners shall mean the natural person who ultimately owns or controls a client and/or the person on whose behalf a transaction is being conducted. The procedure for determination of the beneficial ownership shall be as follows. Where the customer is a company, the beneficial owner is the natural person or persons who, whether acting alone or together, or through one or more juridical person, have a controlling ownership interest or who exercises control through other means. Controlling ownership interest means ownership of entitlement to more than 25% of the shares or capital or profits of the company. Where the customer is a partnership firm, the beneficial owner is the natural person or persons who, whether acting alone or together, or through one or more juridical person, have ownership of entitlement to more than 15% of capital or profits of the partnership. Where the customer is an unincorporated association or body of individuals, the beneficial owner is the natural person or persons who, whether acting alone or together, or through one or more juridical person, have ownership of entitlement to more than 15% of the property or capital or profits of the unincorporated association or body of individuals. There are following 4 key elements of KYC policy. A. Customer acceptance policy. B. Risk management. C. Customer identification procedures, CIP, and D. Monitoring of transactions. I am not explaining each element as this video is only for remembering important points of KYC policy. If you want video on any specific part of the policy, you can put your request in comment box. For a document of any OVD, verification of digital signature will be as per the provisions of the Information Technology Act, 2021 of 2000 for accounts opened using OTP-based KYC. In non-face-to-face mode, following points are important. 1. Consent from the customer should be obtained. 2. Total balance in all accounts will be maximum 1 lakh. In case the balance exceeds the threshold, the account shall cease to be operational till CDD is complete. 3. The aggregate of all credits in a financial year, in all the deposit accounts taken together, shall not exceed Rs 2 lakh. 4. For loan accounts, only term loans shall be sanctioned. Maximum amount of 60,000 can be sanctioned in a year. 5. Accounts shall not be allowed for more than 1 year unless identification as per Section 16 or as per Section 18 VCIP is carried out. 6. If the CDD procedure as mentioned above is not completed within a year, in respect of deposit accounts, the same shall be closed immediately. In respect of borrower accounts, no further debits shall be allowed. It shall be ensured that the XML file or QR code generation for Aadhaar-based authentication date is not older than 3 days from the date of carrying out VCIP. The entire data and recordings of VCIP shall be stored in a systems located in India. Small account conditions. 1. The aggregate of all credits in a financial year does not exceed Rs 1 lakh. 2. The aggregate of all withdrawals and transfers in a month does not exceed Rs 10,000. And 3. The balance at any point of time does not exceed Rs 50,000. It should be noted that this limit on balance shall not be considered while making deposits through government grants, welfare benefits, and payment against procurements. Periodic updating shall be carried out at least once in every 2 years for high risk customers, once in every 8 years for medium risk customers, and once in every 10 years for low risk customers. For self-help groups, SHGs, CDD of all the members of SHG shall not be required while opening the savings bank account of the SHG. CDD of all the office bearers shall suffice. For foreign students, a non-resident ordinary NRO bank account can be opened on the basis of his/her passport with visa and immigration endorsement, bearing the proof of identity and address in the home country together with a photograph and a letter offering admission from the educational institution in India. It should also be noted that pending the verification of address, the account shall be operated with the condition of allowing foreign remittances not exceeding 1,000 United States dollars or equivalent into the account and a cap of rupees 50,000 on aggregate in the same, during the 30-day period. On record maintenance, please remember that bank should maintain all necessary records of transactions, both domestic and international, for at least 5 years from the date of transaction. Bank should preserve the records pertaining to the identification of the customers and their addresses obtained while opening the account and during the course of business relationship, for at least 5 years after the business relationship has ended. One more point to remember that bank shall capture customers' KYC records and upload onto CKYCR within 10 days of commencement of an account-based relationship with the customer. Suspicious transaction report (STR) has to be submitted by branch to controlling office within 7 working days on being satisfied that the transaction is suspicious. Cash transaction report (CTR). All cash transactions of more than rupees 10 lakh or its equivalent in foreign currency, or all series of integrally connected cash transactions exceeding rupees 10 lakh or its equivalent in foreign currency in a month, to be submitted by head central office to FIU in by 15th day of succeeding month. All transactions involving receipt by non-profit organizations (NTR) exceeding rupees 10 lakh or its equivalent in foreign currency. Every reporting entity is required to maintain the record of all transactions, including the record of all cross-border wire transfers of more than rupees 5 lakhs or its equivalent in foreign currency, where either the origin or destination of the fund is in India. Bank shall ensure that the information of all such transactions shall be furnished to Director, FIU India by 15th of the succeeding month. Tipping off. The bank shall ensure that the customers are not to be tipped off, at any level, that the account is under monitoring for suspicious activities and a disclosure has been made to the appropriate statutory authorities. So, these are some important points in respect of KYC guidelines. Hope you liked the video. Thank you.